Welcome, everybody. Thank you for coming. We have a few things to go over. A couple of people still need to get here, but we appreciate you coming to our flood information meeting. We have some great people here already that are going to be able to answer lots of questions. So for those on Facebook, feel free to type in those questions and we can try to come up with a spot where we can answer those as we go. Sorry, let me push the button. As far as everybody that's here, I'm Kelley Rea-Murphy. I'm R&R Realty. My broker, Chris Ryder, is as well here. We have Brian Sharkey, who is the Vice President, Regional Director for the Northern Palm Beaches of the Broward Palm Beaches St. Lucie Realtor Association, or our world, which is a much easier thing to say. So Tracy Dobrie is here from Christian Penner, and we will have Garrett Mitchell and Todd Bell from Rocket Flood and Inspection Express to explain some important things about pricing, the new systems and that. And Danielle Boughton from Get Social Media is here taking care of all the background for us. So if we have any questions, again, everybody on Facebook, please feel free to ask those questions as you go, and we will do our best to answer those as well. Why are we doing all of this? Basically, FEMA is getting ready to finalize their new flood maps. The last time they did it was in 2017, so people in the zones, everything went up. Just for example, where we are today in the village of North Palm Beach, there are going to be 1,400 homes getting ready to get added to this new new area, the special flood hazard area. This is going to affect North Palm Beach, but it's really going to affect all areas of Palm Beach County. We're going to talk about risk rating 2.0. It had explained by the experts. How is it going to affect property values, and what is that going to cost the average homeowner, as well as how can we mitigate those risks and costs. So I am actually going to pass this off to our moderator. I am just the bring everybody together person, our person Brian, who will be able to help us out with that. So Brian, here you go.
Well, thank you, Kelley. I appreciate that so much. Peter, right? And Garrett? Yes. Yeah, all right. Hey, look at that. He's here. Well, before we get started, I wanted to ask, why do we care about flood insurance?
Money.
Money!
It's only for the money.
Yeah, well, as a real estate agent, right? Time, money, and heartaches, or headaches. So, yeah, the money, but also the headache of this. So there's a lot of changes are going on, and if you're a homeowner in the area, we'd like for you to know some of those answers. And that gentleman's going to come up here and talk for about 15, 20 minutes. You're going to get us started and give us some information about this for an hour?
Let's see, however we're feeling.
Yeah.
You ready for me now?
Yeah, that's fine.
I think we are ready for you, because I'm
Or Chris can get started about some of the in general, like the terms and things like that.
So why don't both of you come up here and join me on camera so that way everybody can see you online there. Chris Ryder, R&R Realty, and Garrett Mitchell. Hey, say hi to everybody. Hey. All right, you guys. So, yeah, you're standing in front of the screen, so I'm going to hand you the microphone, Chris, so you can reach the other side over here.
All right. All right, so let's first start off with some basics on flood insurance. Don't know if you have it right now or you will soon to be required to have flood insurance. But some of the basic things here, though, is that FEMA updated the maps last in 2017. Could we back up a slide here? I'm sorry, because what I wanted to talk about, sorry, next one. Sorry, okay, that one. Okay, what I want to talk about is some of the terms we're going to talk about today. We'll be using these during our conversation. FEMA is the Federal Emergency Management Agency. I'm pretty sure we all know that, but they oversee what is the National Flood Insurance Program. The National Flood Insurance Program uses a thing called a flood insurance rate map, or a FIRM. And that is used in two ways. Well, it's used in many ways, but if you're a homeowner, it's used to determine, am I in a special flood hazard area or am I not in a special flood hazard area? And if I am in a special flood hazard area, what is the elevation that I can expect a flood to come up to? That's called the base flood elevation. But the special flood hazard area, and understand too that all of us live in a flood zone, all right? It's just a degree to which there is a probability that you will experience a flood. Once every 100 years, once every 500 years, statistically, probably before that. I can tell you that, a personal sidebar here is the reason why I am here is because I woke up after one of the hurricanes and there was 3 feet of water in front of my house. And I don't live in a canal. So the water was in the street right up almost to my first floor elevation. And I live in the village. So the National Flood Insurance Program, we talked about that. And so these are just some of the terms we're going to be using as we talk through this. 2 things we're going to talk about today are the changes soon to be implemented by the new flood insurance maps, the proposed maps, where again in the village, 1,400 houses will be in a special flood hazard area. So big change. That's 1,400 houses out of probably 5,000 detached houses. That's a big change, right? As well as coinciding with that, as it happens, is something called risk rating 2.0, which means we are going from a different method of calculating what your insurance policy premium is going to be. So we've got 2 big things, 2 big changes coming to flood insurance. And so with that, I'm going to hand it over to our guy for insurance.
Wow, so there we go. So now we've got these 2 things that we got to learn about for homeowners, and you've got some answers for us, huh?
Absolutely.
All right, excellent.
So, would you like me to continue on your presentation or just kind of?
We'll go right to yours.
Sure. So yes, thank you, Chris. And that was a really good intro on some of these base terms. And I'm going to kind of piggyback on that and start with some of these basics to help you guys understand. But we will definitely dig into the main concern, which is how is this going to affect me? And am I going to be required to carry flood insurance? And what is that going to cost me, right? And that obviously has impact on the real estate market and your property value and all sorts of important things. And so I guess
This is just the area for the North Palm Beach, which is the big one. Everything that you folks might see in pink is getting ready to be added to the AE flood zone, which is quite a large amount.
Yeah, so as you just review this map, everything that's red is going to be remapped and going to be placed into a high-risk flood zone in which all the properties in that area will now be required to carry flood insurance by their mortgage when previously they were not required to, right? So not only is it, what does this mean, but there's a question mark, there's a variable there as to what is that going to cost me? Is there anything I can do to protect my house or to mitigate my property to lower the premium, which we'll get into a little bit later, but this is definitely a valuable slide in just highlighting the change that's come into this, community.
Sorry, the clicker quit.
That's all right.
So this is just another way the numbers, when you go to look like on the property appraisers, like the numbers you're looking for you for the different zones. So we can go next. All right, so that's where your start is there.
Okay, sure. All right, cool. Continue, please. All right, these are some topics that we'll touch on. Before we just jump in, just some quick statistics to put things into perspective a little bit, is that flooding is the most common and most destructive natural disaster in the United States. 90% of all natural disasters that occur in the US involve flooding, and all 50 states have experienced flood in the past 5 years. So it's definitely the most prevalent, most, relevant natural disaster for the United States. Okay, so to dig into this, and Chris touched on it in the overview, but what is a flood zone, right? And what does that mean? So before I answer that, I'm going to take one step back to explain base flood elevation, because that has an impact on flood zone. So base flood elevation is where FEMA estimates the water to rise in that 1 in 100 year storm. So in the 1% storm that could potentially come, this is where FEMA is estimating the water to rise. Taking it a step further, what is a flood zone? Well, flood zones are areas that FEMA believes that base flood elevation level will be inundated with water in that 1 in 100 year storm event, right? So that's kind of the baseline metric that's used, is that 1 in 100 year storm, and the base flood elevation has a huge impact in measuring specific properties' risks. They're constantly comparing the specific property in question to the base flood elevation, and that's where a lot of comparisons are made to measure how risky an area or a property is to experience flooding. So as you can see, here is the range of flood zones that you could potentially be in. And this group right here is considered lower risk. If the most common would be X and B. You see mainly X zones though, if you're not in a high risk zone. And then the most common on the high risk side is going to be A, E, and V. But basically, if your property is in a flood zone that begins with an A or a V, you're in a higher risk flood zone, and your property, you'll be required to carry flood insurance for your mortgage. Okay, we'll quickly overview what the 3 types of floods are, because it's very common someone will say, well, I'm not even close to the ocean, I'm not close to the canal, or I'm not really close to water. So this is helpful to understand some things. We have pluvial floods, which are flash floods on surface water. We have fluvial floods, which are river floods specifically. And then we have coastal flooding as a result of storm surge. So flash floods in surface water are very similar, except that flash floods involve water traveling from a higher area into a lower area. But basically, both of these types of floods are a result of the water coming with torrential downpour and accumulating on the surface faster than it can drain through the drainage systems. So when you see certain areas that are notorious, if we get a lot of rain, for an intersection or something like that, to have like a foot of standing water or pooling, that would be a result of one of these things where the rain is coming down hard and it comes and it meets at a lower point. River floods, very straightforward, caused by rainfall involving the river to the water level to rise beyond the banks of the river and affecting the surrounding areas. And that's also true for canals or any type of a river source. So this is definitely prevalent for Florida and the area of North Palm. Coastal flooding, this is by far the most devastating and the highest danger category in terms of risk of life. And this is a result of storm surge coming from the coast caused by high winds in a hurricane mainly, that are going to push the water and the tides inland with force. And this is what you see, in Hurricane Sandy up north and the various hurricanes here, where coastal areas get really badly damaged by storm surge inundating the barrier of the coastal area. All right, not going to get into this a ton, but what I want to point out here is, if you notice, this is history of flood insurance. NFIP was founded in 1968. The maps were created in 1974. And then if you see, there were no major changes to the program until 2012, right? So there were a huge span of time in which the program had no major enhancements, right? So as we segue into risk rating 2.0, it's relevant to understand that the program technology and data and information has become so much more available, but no changes were made to the way that the NFIP was rating risks and the way that they were categorizing risks, right? So for some time, they've been evaluating how can we improve the National Flood Insurance Program to be smarter and to adapt some of these methods that the private companies are using so that they can do a better job of evaluating risk, right? And the last important thing is that in 2009, a bill was passed by Congress that requires all lending institutions and mortgage companies to accept private flood insurance as adequate coverage for their mortgage, right? So when that law passed in 2019, that really opened the door for private insurance companies to be a legitimate player and a legitimate solution for homeowners all over the country to achieve a better premium and better coverage, right? So that was great for everybody. Okay. Definitely the buzz topic over the last 60 days, risk rating 2.0. And, you know, Chris touched on this. The main changes is that we went from an antiquated rating approach that was created in the 70s, and we've migrated and graduated to a data-driven single risk modeling approach where each specific property is individually rated as opposed to properties being put into rate pools and lower risk zones receiving the same rate, you know, a standardized price across the board. And so basically, high level, the old method was really an old school approach to evaluating the pricing and determining what your end premium is going to be. And we've migrated and expanded that now into analyzing many more risk factors and modeling information that really gives the FEMA a much better indication as to how risky a property is, right? One thing we've seen that's a big deal is that in the past, if you were in a low risk flood zone, your price was the same, okay? If you had $250 in coverage, $100,000 in personal property, and a $1,000 deductible, you're gonna have the same exact premium if you were in New York City versus if you were in Kentucky. Now, that's completely out the window, and every single property is rated individually. And what we've seen is the most immediate impact that I've seen in terms of inbound calls and customers being like, what is going on, is these customers that were holding policies in preferred risk zones that weren't required have gotten their renewals, and they went from paying $572 to potentially $2,000. I've seen it upwards of actually $4,200. So these preferred risks are now, the data is showing that not every property in a preferred risk zone is of equal risk, and they're providing premiums that reflect the individual risk of that property, right? So these customers need to reshop their policy with agents and evaluate what their options are, potentially with a private insurance company to see if they can get a better deal. Just last point on this risk rating 2.0, if you could just go back for 1 second, is that 77% of all FEMA policies will experience a rate increase as a result of migrating into risk rating 2.0. So this is important. The premiums are going up because they have better data and they're deploying that. Okay, so rating factors, right? How an insurance company determines how risky your property is to flood, and in turn, how they determine what price they want to charge for your premium, okay? With risk rating 2.0, and with the private insurance companies that offer flood insurance, they are evaluating hundreds of risk factors. But today, we're going to really look at the main, most impactful one, which is called elevation difference, okay? Elevation difference is the comparison of a specific property's elevation in comparison to the base flood elevation, right? So if your property is elevated at 10 feet and the BFE of your area is 12, then your property would be a -2 elevation, and it is considered a very high risk of flooding. The prices start to dramatically change the second that you're 1 inch below base flood elevation, right? And so let's just talk for a quick second on what is your property's elevation, right? What do they mean by that? And what insurance companies and NFIP look at is the lowest risk point of your property, okay? Now, that's typically your top of bottom floor So the top of the lowest level of your house when you walk in, or it's the lowest elevation of machinery and equipment, all right? And different insurance companies pick which one they want to evaluate, but they're looking for the lowest risk level, and then they're comparing that to the base flood elevation. That determines your difference. Positive elevations, because water travels downhill, positive elevations are at a much lower risk. Negative elevations, because the water is going to travel down, of course, are at a much higher risk, right? So there's all sorts of other things that are considered: surge scores, distance to floodable source of water, a whole range of hundreds of factors, right? But probably the most impactful and the most relevant is elevation difference. And so it's important to kind of understand your property's relationship to BFE. So some quick statistics, and interesting, if you notice here, this is where we are right now. And the flood zone actually encroaches on the parking lot right here, but luckily doesn't look like it touches the building. So properties located in high-risk zones have a 26% chance of experiencing a flood in the life of a 30-year mortgage, right? So basically, you have a pretty significant chance of experiencing a flood if you own the home for a span of 30 years. Another important statistic is that 25% of flooding occurs outside of the high-risk zone, or 25% of all FEMA flood claims that have been paid out historically happen outside of the high-risk zone. So that's a really important thing to kind of, double down on, is that we need to educate against this misunderstanding that I'm not in a high-risk zone, my mortgage doesn't require me to carry flood insurance, my property's not at risk, right? And so 1 in every 4 claims happens outside of that high-risk area. And in the last couple years, between 2015 and 2019, almost 40% of all NFIP paid losses happened in low-risk areas, right? So that number of claims and where they occurred is much higher in the last, 6 years than normal, right? So that's one of the reasons that NFIP and FEMA is adjusting these flood zones, is because they don't feel they were a proper reflection of the risk, and so they're looking to correct those. Okay, so, this is a bit about our organization, but it really just goes to any agent, right? So as a consumer, how do you secure the best pricing for your property? You need to work with an expert, and you need to work with an agent that has resources, okay? And so some of the things to evaluate if an agent is a good fit and if they're qualified to really provide you the best rate is ask them how many flood carriers they represent, all right? On average, an insurance agent may represent 2 to 4, and at Rocket Flood, we represent over 20 flood carriers. And so with anything with insurance, the more carriers that you shop, the more options you have, the better chance of securing the most competitive rate available, right? So qualify an agent that you're working with. Ask him, how many flood carriers do you represent, okay? Next, you could also, ask them how many policies they write. But in conclusion, we have a team of over 10 flood insurance experts. All they do is write flood insurance all day. They don't do home, they don't do auto, they only focus on flood. And we have special automation technology that allows you as a consumer to go to our website. You can type your address in, and it will automatically quote all 20 properties and deliver the quote to you via email and text message. But then the last thing is speak with them about, are there any things I can do to my property to reduce my premium for flood, right? And if somebody's an expert in flood insurance, they can walk you through the options of what is available to reduce your risk, right? And some of those things very quickly that I would evaluate, depending on the property and the foundation type, would be installing flood vents in your property or elevating your utilities. A lot of times, if you can elevate your air handler above base flood elevation, that can, qualify you, that can take you out from being considered negative to then elevating that risk point above, and that can drastically reduce your premium. So.
And then this was great. Give a round of applause, guys. Don't go anywhere. Garrett, don't go anywhere. I want you to get comfortable right here. Sure. I'm going to grab another chair over here. Yeah. Yes, come on, let's go. We gotta have questions. I got tons of questions. So, it was a great study. We were talking about having a professional and resources. And you know, this whole thing started because Kelley, you're acquiring a great team of people, right, to help you out. I think we need another chair. You talked about the finances, right? And what was the number? How many people are going to have to redo their mortgage and have insurance?
I believe in this area, there's around 1,400.
There were 1,400 people that are going to affect that. And the mortgage companies now are going to require them. Is that correct? Yes. Huh. Wow. So, Chris, you had also made a point. I think we were talking earlier before this.
The inclusion of your property into a flood zone does unfortunately affect the valuation of the property. They did a study after Sandy that found that the mere fact of being in a newly mapped special flood hazard area, at least, and remember, we're all in a flood zone, but if you're in a special flood hazard area, that means that you can see a decrease in value immediately of over 8%. Again, statistically, and this was done a study after Sandy. There was a follow-up study that looked at homes around Miami, and in that they similarly found an immediate decrease in value based upon inclusion in the flood zone. But they actually took it one step further and they looked at the rate of appreciation between properties. And what that study found was that not only did you lose money initially, but you also gained value in your home, in your primary asset for most of us, at a rate that was lower than folks who are not in a special flood hazard area. So, I mean, that has multiple implications for yourself personally. It has implications for tax-based calculations. I mean, it has all kinds of implications. But it also will ultimately, why is that the case? Well, it's because we see floods on the news every day. So mentally it affects, I don't want to be in a flood zone. But also, historically at least, there was a big difference between what someone who was in a special flood hazard area paid for insurance and what someone who was not paid for insurance. So sometimes, again, those preferred risk policies were $500. But if you're in a special flood hazard area, you could be spending $2,000. Well, that cuts into the amount of your income that you have to pay for your principal, interest, taxes, and insurance. So more money towards insurance means less money towards the mortgage that I can carry. So there really is a range of things in there, but it does most certainly affect value both initially and as you go forward.
Now, if I'm a homeowner and I realize that I might be one of those 1,400 people, and what do I do? What do I do first from a real? Maybe I'm thinking of selling the house. What would I do?
Well, I would say the first thing is, and I'm a big proponent in this, that only when armed with the accurate data can we make an informed decision. So the first thing is call up your insurance agent. Mm-hmm. Ask them, am I in a flood zone now? Is my house being moved into a flood zone? And I say a flood zone, a special flood hazard area. Am I going to be required by my lender to carry this? I've had flood insurance since I moved to Florida because it's a smart thing to do. But will my lender now require me to have it? And if so, what is that number? Well, what are we looking at? Because we're now in a transition period. So you will be affected if you had insurance. You may find yourself in a ramp-up period. Not an initial thing. It's not $2,000 tomorrow. Then we'll start you off down here, and then you go up every year. But I would say the first step in that is call your insurance agent and find out what those numbers are, and then see if those numbers affect you.
Okay, so I call him. He says, "Okay, here's the rate," but I'm looking at the maps and I think that the elevation of my property is different than what my insurance companies tell me. What do I do?
You can contest your inclusion in a special flood hazard area. I personally have done it. I went through that process and I was successful in it. It is.
I might tell the audience that you were the only one successful in it. That's why you're sitting here today.
Well, again, when I first moved to Florida, it was a year or two later, we had a big hurricane and there was a lot of water in front of my house and it definitely got my attention.
Wow.
So yes, that's something I followed, but yes, you can contest them. The basics of it is that if what is called your lowest adjacent grade, your dirt next to your house, if that is higher than the base flood elevation on your FEMA map, on your flood insurance rate map, then you can apply to have your property removed from the flood, from being included in that. At
the higher risk.
What's called a letter of map amendment.
Okay.
And yes, you can do that, but it takes effort, it takes time, it takes money, it takes all of these things, but it's possible.
Now, will my mortgage company be calling me to tell me that I have to
Yes.
have insurance?
Well,
Oh,
they'll be sending you a letter to let you know that you're now.
and how much notice are we getting? Do we know?
So I think you have like 30 to 45 days.
Yeah, it's like 30, it's a very small window. I can tell you that again, I got one of those letters because when the maps were implemented last in 2017, I got a letter from Bank of America saying, hi, how you doing? And I had followed this and I actually did not think that my property was going to be included in the special flood hazard area because the line came up into my front yard, but it did not touch my structure. And I looked at the manual and said, I'm all set. Well, Bank of America hired someone called CoreLogic and they said, no, we think you do need it. So that's why I got into the little fight with them. But to answer your question, yes, the banks, the lenders, they contract with the CoreLogics of the world to determine which one of our lenders is now in a special flood hazard area. They then use that data and send you a letter that says, hey, CoreLogic says you're in a special flood hazard area now. Go get flood insurance or we will force place a policy for you. And that is not the thing that you want to do.
Don't want that, right?
Don't want that. That's a big money policy.
So my question for Garrett is, it used to be you could be grandfathered in. So can you do that still? And then like my house is not in a flood zone and it's not moving towards that. But I called and said, I know this is happening, the grandfathering is there, and I don't know what it's going to be. Because there's grading 2.0 is there, which, and by the way, it takes 30 days to get flood insurance. So don't think on June 1st with hurricane season, it might be a flood, so you should get it temporarily. Not happening for you all, by the way. But it would be just for the FEMA flood insurance and national flood insurance. My house, not in a flood zone, is now like just over $700, almost $800. That just covers my structure. To get content, which is only $250,000, all we're talking about for the first $700. It was over $1,200 to get content insurance. And I'm not even in a flood zone, but this is part of the new 2.0. If I do this and I spend, say, the additional $100 a month, and then in April when things start ramping up, will I then have that slow acceleration once my house finally makes it to the flood zone?
Yeah, so that example of being in a low special flood hazard area, the grandfathering, I'm not sure it applies to the lower risk zones, but it's really on a property by property basis. And when you go in, see, FEMA is pretty technical and we rely on leveraging the information that's presented to us in the FEMA systems and such. But yes, grandfathering is an option. You should speak to your agent if you qualify and what the grandfathering period would be and how that would affect you. Because that is understanding that grandfathering is, a relevant, topic that could apply to you and you could benefit from, maintaining the old zone or maintaining some old rating approach for a certain period of time.
I actually have a question. And my question is for you, which is that a big part of the, like, the homes that are being moved into the flood zone are the homes on the water. Those are high value homes. Those are homes like in Harbor Isles in the village. These are $4 million to $8 million homes. Yeah. $250,000 worth of coverage doesn't move the needle. Right. So I guess my question to you is, now that we do see private insurers coming into the marketplace, is there a viable option for those high value homes?
Absolutely. And so some of the huge benefits to private flood insurance, not only is, more competitive pricing, but it is enhanced coverage options, right? So one of the main ones being that private flood insurance companies will insure a property over that NFIP ceiling of $250,000, right? So I would say on average, a private insurance company will offer at least $1 million in coverage. And there's a number of companies that will go up to $5 million in building coverage. So that's a key benefit, and you should ask your agent if you're interested in securing more than that $250,000. What would the quote be at full replacement cost of the full rebuild cost of my home, especially if you're, in an extreme coastal area.
Just going to ask more questions. Do we have any more questions from the audience? Come on, you came with so much good information as soon as you came in here, Peter. Oh, excellent. All right.
That's good. My experts are working.
I think that it's important, and folks in Florida in particular will understand this, is that we talk about as best we can. Like in Florida, we get hurricane insurance. We get a mitigation discount. We have someone come out to our house and they talk about, okay, you've got hurricane shutters, you've got a good roof, you got straps, you get a discount. What can a homeowner do? And we talked about this a little bit, but I want to talk about two things. First is, making sure that I am giving you the right data on my house so that you can accurately quote it. And two, is there anything proactively that I can do, like put on hurricane shutters or the equivalent, to get my rate down so that I can move my insurance number from 2,000 to maybe 1,000, whatever the numbers are. How could I go about? First of all, when you sit down to quote a property, you put in the address, I imagine. What other data do you put in? We talked about. I know that now one of the things I looked into is that similar to windstorm insurance ratings is that masonry homes, concrete block homes, will now get a better rate than wood framed homes in terms of their flood insurance as well.
Yeah, certain companies certainly look at that. The construction type of the property is considered a rating factor simply because the deterioration rate of concrete block is much slower than the deterioration rate of a frame wood built house, right? So that is something that is considered with some companies. To circle back, your first step in having an understanding of all the details surrounding your property's elevation could be to reach out to an engineering or surveying company and obtain an elevation certificate, all right? This is a detailed document that surveys your whole property lot and your property and details, roughly, 12 to 15 metrics regarding the elevation of your property, right?
I don't know if we can zoom in on, but I actually brought mine. I can find out. Maybe we'll post it. We'll post it. We'll post it. We can post it.
And so what the elevation certificate outlines is it does provide general information about your flood zone, your firm map, your base flood elevation. And then it goes in and they measure and detail all the different elevation points, right? He touched on lowest adjacent grade, right? The lowest point of the earth. It will outline top of bottom floor, right? So as you enter the first floor of your house and you walk in, what is the elevation point of your top of bottom floor? That's important because if 1 inch of water penetrates that threshold and you get 1 inch of water into the first living area of your house, on average, that claim is $25,000 to $30,000.
What they call the wet carpet.
Exactly, right?
Wet carpet, which is a high percentage of claims, as I understand.
And that's why they really harp on that elevation difference. And the model, they're looking at that model to see, okay, when do we suspect that the water will pass that threshold of entering into the finished space of the property, right? And it will also outline the lowest elevation of machinery and equipment. And this is really important, especially as we migrate into private flood insurance being a huge value for the consumer, is that a lot of these private flood insurance companies really care. They care about different things. One company may only care about top of bottom floor. The other may care more about lowest elevation of machinery and equipment. So as an agent, we can look at your elevation certificate. We can analyze your foundation type and where your utilities are, where they're located in the home, and things like that, and make recommendations on improvements, right? And then give you projections so you can see what your break even or when you would see a benefit on the return on your investment, right? If you elevated your AC unit or if you installed flood vents in your property. And a lot of it has to do with what kind of a foundation type your house has, of how we're going to make these recommendations.
So I have a question for Kelley. I'm a new buyer. I'm going to go into the Jupiter area and I'm going to purchase a home. And now I understand I got to get an elevation certificate. What do we look for? When do I order an elevation certificate as a buyer?
I would order that immediately, because getting the survey company out there is going to be, that usually can take a little bit of time, but immediately, because my assumption would be, depending on the contract that is written for the buy, you would have that 10 days to get that taken care of in your inspection period and quote. What you don't want to have happen, and Tracy can speak to this, is you don't want to get to the end and have your lender find out, 5 days to go, oh, by the way, you can't really get that insurance because, and then the whole deal is off. So that would need to be, I would order it with the inspection of the home and just let the seller's agent know we are doing this. So just so you know, down the line, this may be a factor, or it could be written into the contract that this is happening and it could be a kick out at the end.
So we could put the contract in that we could check all this out first before we actually buy the house.
And I would just point out as well is that oftentimes, if you're buying a home that's in a special flood hazard area, that person, that seller has flood insurance. Right. You can ask the question of them, how much are you paying for flood insurance right now? Can I see your flood insurance doc page or your declaration page? Do you happen to have an elevation certificate that you could share with me as part of the disclosures that we go through when we buy a property? But where this is going from a $500 a year whatever to now $800, $900, $1,000, $2,000, all of a sudden this gets to be something you really want to pay attention to. This is no longer a de minimis concern.
I'm going to ask almost the same question. So I'm thinking about selling the house. I look in there, I see I've got my survey. There's no elevation certificate. What happened?
Okay, well, I'll say this too, and I happen to be an engineer as well. So you can sometimes get that data in essence with a little bit of math converting numbers from your old building plans. Right? When you build a house, even back in the 70s, they built those houses to a certain elevation, right? I mean, around here, the flood maps weren't implemented until 77 or so, 77, 78. But even back then, the building official wanted to see what the elevation of your slab was. And so there's a number on there. Sometimes it's in what's the older datum, what's called, so you have to convert it. But you can sometimes get that, and although it's not an elevation certificate, you can still give that to your insurance agent and say, I think my finished floor elevation is going to be about 8.6 feet. And they can look up and find out what the base flood elevation is by looking at the flood maps. So sometimes you can get that data elsewhere in the public record. Because as Kelley pointed out, I mean, the surveyors are very backed up right now, but I am a proponent of, I tell people when they buy the house, even if you're not in a flood zone, get an elevation certificate. It's a couple $100. And if nothing else, you've got it in your back pocket when your insurance agent says, well, CoreLogic estimates, or whoever, whoever they're outsourcing that data collection to, they think that your finished floor elevation is 8.6 feet. Pick a number. And you say, well, I've got an elevation certificate here that says it's 9.1, and that increases your freeboard, how you're rating, all right? Remember, if you're just a little bit below that base flood elevation, you pay a lot more. Now, if you're a little bit above, you pay a little bit less. If you're a lot above the base flood elevation, you pay a lot less. So I think that step one, and before the surveyors get backed up with all this work, is go get an elevation certificate if you don't have one.
The other thing I found out was in things over the years with flood, the flood insurance is for the house. It's not yours. It's not like your content insurance. It's for the house. So you can tell your new buyers, my house has flood insurance. Here's the name of the company, call. And more than likely, they're going to take you on. Or if nothing else, you'd have something to bargain with when you call Garrett. So.
Yeah, and just in this same topic is one of the huge developments that encouraged private insurance companies to get involved and start offering flood insurance was the development of this technology called LiDAR. And companies are using LiDAR to determine the elevation of the property without needing an elevation certificate. All right. And this was really what opened the door for private companies to feel confident to get in. And so what LiDAR is doing and what it's capable of is it's capable of measuring with a pretty impressive degree of accuracy the elevation of the ground, right? So they shoot a signal down and they're able to grab the elevation of the ground that the property was built on. And then they're asking context questions using about what the foundation type is. And they're using that to put the finishing touches, right? So if you have a slab on grade, most insurance companies are going to ask how many steps lead up to the front door, right? So they're able to grab the elevation of the ground. And if you say there's one step up into the house, they're going to add 6 inches of elevation to that profile and use that when quoting you. If you're on a crawl space, they may assign you roughly 3-stair walk up, which will be roughly 18 inches, or they'll ask you how many stairs lead up to the front door. So they're using these creative methods in conjunction with improved technology to gather the elevation components of a property without requiring this elevation certificate. And that's been a huge value to both consumers and people transacting a real estate purchase, because as you said, right, maybe they don't order the elevation certificate in time, and now you need evidence of flood insurance to get through closing, and there's an agent telling you, I'm sorry, we don't have the EC, we can't quote you without the EC, all right? That's a clear indication that that's not a flood expert, okay? They can go to a private company and they can leverage their resources to secure a policy without needing that document by working with companies that use LiDAR and other technologies like that.
And since you mentioned LiDAR, I want to give a little shout out here to the Florida Association of Realtors, because after the last implementation of the flood maps in 2017, the Florida Association of Realtors legal division, their political action committee, their PAC, basically lobbied the Florida legislature to get $15 million appropriated to updating our LiDAR maps. Now, LiDAR is something that the technology has changed over the years, and now we can have a much more accurate map. And so actually, so FAR got 15 million, and the U.S. Geological Survey, they kicked in another 8.5 million or so, I believe. And so we are in the process right now of collecting that data and finalizing it. But, you know, for realtors, of course, this is a big topic. You know, this affects us in many different ways.
And part of the reason with the LiDAR and things like that is part of the reason Palm Beach County as a whole has actually opposed what they've put forth as the map. Each individual municipality is going to have to do the same for themselves. Palm Beach County legally can only oppose what is their property, so that anything in unincorporated county. But at this point, all of the other municipalities, none of this has gone officially into effect because they're waiting for things like the oppositions to run their course and go through. So there's still some time to hopefully mitigate some finances down the line. You know, I kick myself for waiting until September to call and ask for flood insurance instead of doing it in June. So I think I probably could have saved myself a little money before the 2.0 went into effect, but that's okay. Down the line, I think in the long run, it's going to be better for everybody as a whole.
Kelley, I know on behalf of everybody here, we want to thank you for getting your team together. And I know we have a couple minutes left, so if I could just let them all give like maybe a 30-second plug.
Yeah.
And we'll pass the mic down. So we'll start with Tracy over here. There you go. Give everybody your plug.
Tracy Dobrie with Christian Penner Mortgage Team, and we're in North Palm. If there are any questions, you could always give us a call at 561-316-6800. And knowing that flood insurance is necessary and mandatory when you do have a mortgage, so it's important that you
Yeah,
do
well,
speak to your.
thank you so much, Tracy. Now you, Garrett, here you go.
Sure. Garrett Mitchell, founder of Rocket Flood. We have invested, a lot of money and time into developing technology that for the consumers will give you insight and the tools to secure the most competitive flood insurance possible, right? So I have LiDAR integrated into my system at a 10-meter resolution. I can pull all sorts of information about your property. All we need is your property address and you to tell us what foundation type it is, and we're going to shop over 20 flood insurance companies to secure you the most competitive rate. We specialize in working with mortgage and real estate professionals to make deals happen smoothly, and working with consumers to counsel them on how to get the best premiums and just secure the best rates possible.
Hi, Chris Ryder. Excuse me. I am the broker owner of R&R Realty. And as you might have noticed, flood insurance is my hobby, but also as is all insurance, because it is a big aspect of what Kelley and I do. We sell you a home, yes, but that home needs to be insured. And as I mentioned earlier, if I can get you a better rate through my experience in how to reduce your windstorm insurance or how to reduce your flood insurance, that means that you have more money to spend on your home. And so we want to spend money on a house, not on insurance every year. The insurance is necessary, and I get that, for everyone, for the lenders, for all of us. But ultimately, we don't want to pay any more than we have to. So to the extent that we can educate ourselves and ask the right questions, or get you to ask the right questions, perhaps of your insurance agent, maybe we can save you some money and make everyone happy.
Thank you, everyone, for coming. We appreciate it. We are going to be taking, were way more slides, but this was a much better, more informal style. We will have them on, Chris and I, on our websites, and I'm happy to share with everybody else all of this information once we get it set up from the Facebook Live and anything that was happening on Zoom. We appreciate you coming. If you have any questions, feel free to call me, 561-310-6106, and I will get, if I don't know the answer, I will get you to the right expert, because I'm a realtor. I am not an expert in all of these fields. So